I'm Greg Hunter. Welcome to USAWatchdog.com. With us, a return trip by Peter Schiff. He is with Euro Pacific Capital, also Schiff Gold. Coming to us from Puerto Rico, Peter Schiff, thank you for joining us today on USAWatchdog.com.
Oh, my pleasure, Greg. Always like to spend some time with you on your program. I've been doing it for a while, and you guys have been very successful at helping to spread the word.
Well, you're people love you on the site. You pretty much come out with no hold no punches, pull back no punches. I want to start with the repo market. I mean, what's clearing in zero hedge is that they only spent 38 billion, and they look like they got it under control. What's going on in the repo market? I think they had trouble.
Yeah.
But they got this thing going on till the month of November that the Fed has going on. What's going on with the money and the debt?
Well, as I said, I've been doing USA Watchdog for a while, and from the beginning, from the minute the Fed got us into this mess, when they initially lowered rates to zero and then they started quantitative easing, I said it was a mistake for a number of reasons, but one was that we could never reverse the policy, that by bringing rates down and encouraging more debt, they were going to leave the nation so heavily indebted that it would be impossible to ever normalize rates again, which was going to be a huge problem. But of course, the Fed pretended that they had it all under control, and the markets believed them. And then, when they finally started tapering QE and talking about raising rates, everybody began convinced that the Fed could actually do what they were claiming they were going to do. And so the dollar rallied and gold sold off because everybody was celebrating a victory that hadn't actually been won. And I kept saying, they're never going to do it. They can't normalize rates. Somewhere along the way, once they start hiking, they're going to have to stop and they're going to have to go back down to zero. They'll make up an excuse, but they're going to do it. And I said, they're never going to be able to shrink their balance sheet. If they even try, they're not going to do it very much. And then they're going to have to reverse course and go right back to QE. Well, where are we today? The Fed just cut rates twice. They're about to cut them for a third time. The highest they got was 2.25. That's nowhere near normal. In fact, adjusted for inflation, it's still negative. So they couldn't normalize rates. Now they're cutting. Now they're making up excuses, just like I said they would. They're saying, oh, it's just an insurance policy. Don't worry. There's nothing to worry about. Everything is great. But we're going back to zero. Right? And we're not doing this because the policy was a success. It's because it was a failure. Same thing with quantitative easing. They stopped quantitative tightening, and no sooner did they stop that they went back to quantitative easing, except they're not even admitting that they're doing quantitative easing because they don't want to admit that the economy needs it. And when they started QE, what they really were doing is just monetizing debt. They were creating money, inflation, and buying government debt. I mean, that's, a banana republic monetary policy. They didn't want to admit that, so they came up with this word quantitative easing because they didn't want to actually say what they were doing. Well, now quantitative easing has bad connotations because people equate that with a financial crisis and a Great Recession. So the Fed doesn't want to have to admit that it's doing that again, but that's exactly what it's doing. In fact, last week, through these repos, the Fed's balance sheet expanded by $88 billion. And if you go back over the last 3 weeks, it expanded by $176 billion. So when the Fed was doing QE3, they were buying $85 billion worth of debt a month. They just did $176 billion in 3 weeks, and they're not even doing QE. So the Fed is monetizing more debt not doing QE than when they were doing QE, which means they're doing it. Right? And they're going to have to do more of it. And the reason they're doing it is because the markets are finally trying to move interest rates higher because the Fed has been suppressing them. They're artificially low. And these artificially low interest rates have done tremendous damage to the economy over the years. Now, finally, the market is trying to raise rates, and the Fed is having to stop this from happening. I mean, they shouldn't, but that's what they have to do to keep the bubble from imploding. And so that's why they've had to go back to QE, because if they didn't do this, rates would already be much higher. And if that were the case, the stock market would already be lower. Real estate prices would be coming down. We'd be heading for another financial crisis.
Some people say that the end goal is going to likely be the Fed is going to go away. The debt's going to be defaulted on. What's the end goal here? What happens? We can't be doing this, printing money forever. The dollar goes away, or something goes away, something happens. What's the end goal in all this?
Well, the only goal that our leaders have is to postpone the pain so they can get reelected. I mean, that's the whole idea. Is like, look, this is a gigantic time bomb. We just have to make sure that the fuse is longer, right? We have an election coming up. The Fed chairman just want to make sure that they can keep everything going long enough to resign and have somebody else potentially be the fall guy. Nobody cares about the long-term health of the economy, and nobody has a plan. Right? The plan is just to delay the inevitable and pretend everything is good. Don't think that there's some giant conspiracy out there. And as far as the debt is concerned, the debt is never going to be repaid. I mean, we can't repay it. In fact, nobody even believes we're going to repay it, right? If you ever ask anybody in power, hey, how are we going to repay this debt, right? Remember, about $1 trillion has to be repaid every month because it's all short term. We have to keep borrowing. And the idea is that the debt never has to be paid because we just keep borrowing money. So whenever a bond matures, we just sell another one. And then we pay off the existing holder with money from the new guy. It's a gigantic Ponzi scheme, which we assume we can continue indefinitely. Madoff assumed that he could keep his Ponzi scheme going indefinitely, or at least until he died of natural causes. But, it didn't happen that way. So I don't believe that we're going to be able to keep this thing going. But since we can't repay the debt, since it's mathematically impossible to repay the debt, and since creditors are not going to go along with this ride indefinitely, how are we going to default? That's the only question that we need to ask. And there's two ways to default. There's the honest way, and then there's the political way, right? The honest way is admitting you can't pay, and then leveling with your creditors. And, we have to restructure. We have to have a haircut. Maybe we'll give you 20 cents on the dollar. Right? That's the honest way for the government to default. The dishonest way is to get the Fed to create the money and have the Fed print money. And so people get paid, right? They get all their money back, but they don't get their purchasing power back because the money doesn't buy anything. So inflation is a worse way to default, and it actually does far more economic damage than a more honest default. But it's more politically expedient to take the printing route, especially since nobody believes they're going to destroy the currency. They think they're just going to print enough money just to reduce the value of the debt enough to make everything go away. It's like trying to get a little bit pregnant, which is impossible to do, right? So once they really start monetizing debt in that way, I mean, that's it. The dollar is going to get killed, and that's where we're headed. I mean, that's the only thing that hasn't happened yet. I mean, gold is broken out. Gold's over 1,500. It's hitting record highs in most currencies. Not the dollar yet. The dollar is still relatively strong against the other fiat currencies, but the fact that it's this weak against gold shows you that there's a lot of underlying weakness in the dollar that is yet to manifest in the foreign exchange markets, but that's going to happen. And when that starts to fall, that's really the beginning of the end, because that's also going to take the bond market down with it. Long-term interest rates are ultimately going to rise when the dollar tanks.
You're in good company, because didn't Alan Greenspan bring that up, saying that he was worried about a year ago or so that he was worried about an uncontrolled spike in interest rates? What's he talking about? How do we get that? I mean, this is not some boob. This is the former head of the Federal Reserve saying that we could get an uncontrolled spike in interest rates. How does that happen?
Well, first of all, I mean, he ought to know how this thing is going to end, because he wrote the playbook that these other fools are following, and they don't realize, what the end game is. But I think Alan Greenspan does, and of course, ever since he's been out of office, he's been more candid, and he sounds more like me as far as where he thinks we're headed, which is stagflation. Now, I think it's going to be, depression and inflationary depression. Stagflation makes it sound like the 1970s. I mean, this is going to be a lot worse than the 1970s. But look, I'm in Puerto Rico. You mentioned that, right? Puerto Rico is broke. Everybody knows that. Puerto Rico borrowed a lot of money, can't repay it. But, before Puerto Rico basically stopped paying, everybody was loaning money to Puerto Rico. I mean, U.S. investors, particularly muni bond funds, couldn't get enough of Puerto Rican bonds. They just kept loaning Puerto Rico money, until one day everybody realized that Puerto Ricans could never pay it back, and then the party ended. But, I mean, it should have been obvious years before it was. And the fact that lenders were so willing to throw money at Puerto Rico, the politicians took advantage of that and just bought votes with all that borrowed money. And so, but eventually interest rates started to move up. That's what really was the end of it. Once the markets demanded higher rates, Puerto Rico couldn't pay. The same thing is going to happen in the United States. At some point, creditors are going to have a more realistic outlook for the long-term purchasing power of the dollar, and they are going to demand a higher rate of interest to compensate them. Right now, the markets are all screwed up. You've actually got negative yielding sovereign debt. You got people loaning money to governments and accepting a loss, right? I mean, it is impossible to make money on a negative yielding bond if you hold it to maturity. The only way you can make money is to sell it before it matures if you can find an even bigger idiot than you who's willing to lose even more money by paying an even higher price to have an even bigger guaranteed loss. So we are in the final stages of this bond bubble, right? When you got this kind of insanity. I've been talking about the fact that buying a money-losing bond is even more ridiculous than buying a money-losing stock, where people were buying a lot of money-losing stocks, but at least in theory, stocks that are losing money today might make a profit tomorrow, but you'll never make a profit in a money-losing bond. Now, interestingly enough, the bubble in money-losing stocks has popped. All these stocks are caving. The IPOs are being canceled. They're collapsing. So I think the next shoe to drop in that area is going to be the collapse in the bond market, where you see these negative yielding bonds really getting hit. And at some point, interest rates are going to spike in the United States. They have to. In fact, the repo deals that are going on right now, that indicates the fact that the market is already trying to move rates higher, and the Fed is trying to resist. But there's so many holes now blowing up in this dam, and they keep trying to put a finger in every one, and then as soon as they plug up one, another one breaks. But once rates really get pushed up, because after all, the inflation rate, the official inflation rate is what, 2%, 2.25%, 2.5%, whatever it is. But the real inflation rate is much higher than that. But once the official or the official rate is 3%, 4%, what idiot is going to buy 10-year treasuries at 1.5%? I mean, it's going to stop, and the pressure is going to be on to move rates up to 5%, 6%, 7%, whatever. But the U.S. government can't afford to pay those higher rates, just like Puerto Rico couldn't afford to pay. The difference is Puerto Rico doesn't have its own central bank. The U.S. government does. We got the Fed. And so if the market doesn't want to buy this debt, the Fed will create money out of thin air and do it. The problem is they're going to have to create so much money to buy all this debt that nobody wants that the dollar is going to collapse. And ultimately, they can't keep all the interest rates down. Even if they're buying treasuries, what about corporate bonds? What about muni bonds? I mean, they can't buy all the bonds. So anybody who's not able to sell their bonds to the Fed is going to have massive interest rates, because then you're going to have to find real buyers who are going to want to be compensated rather, for the loss of purchasing power that the Fed is creating in order to try to prevent rates from rising for the federal government.
You say a hyperinflationary depression. Would you paint us a picture of what that looks like?
I said inflationary depression because basically, I think we're going to go, yeah, it could end up being hyperinflation. I mean, don't rule out that possibility. I mean, it's still there. In fact, I think the likelihood of hyperinflation is greater today than it was 10 years ago, because what we would have to do to avoid that fate is much painful now than it would have been 10 years ago, because we've made the bubble so much bigger, which means it's less likely that politicians are going to do it. And especially if you look at the mood now of the country, which is socialism, which is capitalism doesn't work. And, Trump may put the final nail in capitalism. This whole thing may be blamed on capitalism and tax cuts and deregulation, and we're just going to turn over the country to a bunch of socialists to repeat an experiment that has failed every time it's been tried. Yet, people somehow believe that if we do it again, it's going to work. But the reason I'm saying it's going to be a depression and a lot of inflation is, go back to the first depression, right? The Great Depression, rather, in the 1930s. The reason we had that depression was because the newly created Federal Reserve inflated a bubble in the second half of the 1920s. And they kept interest rates artificially low. Greenspan himself has written about this. And so the Fed, and he blames the Fed for the 29 crash because they kept interest rates too low. That caused real estate prices and stock prices to rise. When the Fed tried to prick the bubble and raise rates, prices came crashing down. Now, we would have had a pretty severe recession. It might have lasted for a year, year and a half, and then it would have been over. But Herbert Hoover didn't want to let that happen. He was convinced, and based on some of the bad advice he got, that the government needed to intervene, that we couldn't just let the market liquidate the malinvestments, that we needed to do something to help. We needed to have some bailouts or something. And so because of what Hoover did, we didn't get the free market type of recession that we got, let's say, in 1920, where we had a market decline and a decline of the GDP even greater or as great as 1929. But we didn't have any government intervention, and so we quickly ended, and we had the beginning of the Roaring '20s. But then Hoover intervened, and as a result, we were still in recession when he was up for re-election. Now, Roosevelt, he campaigned against Hoover by claiming that Hoover was spending too much money, the deficits were too big, that all of his interventionism was a problem, right? So people voted for Roosevelt because they were rejecting the big government policies of Hoover. The problem is, as soon as Roosevelt came in, he not only embraced those big government policies, but expanded them and made them even bigger. So the Hoover-Roosevelt intervention and the New Deal is why the Depression lasted until the end of the Second World War. It didn't end at the beginning of the war, like, the Paul Krugmans of the world want you to believe. It wasn't until the war ended that economic growth returned to the homeland. Sure, there was GDP growth during the war, but it was all making bombs, right? If you actually look at the standard of living that people had, it was terrible. I mean, forget about the people who were fighting, their standard of living, but the people who stayed behind, everything was rationed, and you couldn't buy anything, and women had to work because their husbands were in the army. I mean, it was very difficult economic times. It was when the war ended, 1945, the government cut spending. They were able to lower taxes a bit, cut spending, and that's what unleashed the recovery. But we didn't have inflation during the 1930s because we were on a gold standard. Now, Roosevelt, confiscated gold and devalued the dollar, but we didn't take us off a gold standard. And so, the dollar remains sound. But today, right, the interventionism that we're getting now, it started with Bush and it went on with Obama, and it's going to continue with whoever succeeds Trump, right? This is going to turn this into a much worse depression. We're going to have much bigger growth of government, especially if we get, a Warren Sanders type, administration. But when the Great Depression started, we were a sounder economy. We had trade surpluses, we had a lot of savings, we were a manufacturing economy, we were in much better shape. We didn't have any welfare, we didn't have any Social Security, we didn't have any food stamps, we didn't have any minimum wage laws. We had a free economy, so it was much easier for the economy to function. Today, we don't have any of that. We're a huge welfare state. We're drowning in debt. We have record federal debt, record state debt, record individual debt, and we're going to go into a deep downturn. And we have printing press money. We have no restraint. We have no gold standard. And so they're just going to print and print. You got people now that believe this nonsense about this modern monetary theory where there's nothing modern about it, and it's not even a theory because it's obviously a disaster because it's been done before. It's not something you have to theorize about. But it's going to be massive inflation. And then, how is the government going to respond to this? What are they going to do? They're going to start rationing things. They're going to have price controls like they tried under Nixon. They're not going to work, but of course the government's going to try it because they have to find a way to control spiraling prices. And, they're already trying to kind of set the stage for higher inflation. They just don't realize what's going to happen when they let this genie out of the bottle. Because if you go back to how the Fed viewed inflation, when the Fed was first started in 1913, the goal was price stability. And at the time, like before the Fed, prices were falling, right? In 1900, the CPI was half of what it was in 1800. So prices fell by 50% over 100 years. And the theory was, hey, this is not good. It'd be better if we had stable prices. Falling prices are bad. Of course, that's BS. They weren't bad. But the bankers convinced everybody that it was bad. And so it would be better to have stable prices, which was prices that didn't change. So that's what we bought into. Now, of course, once we started the Fed, we never had stable prices. Prices went way up. The government failed to keep prices stable, but at least they pretended that that was their goal. Then later on, stable prices evolved to keeping inflation below 2%, right? They had a 2% ceiling. We don't really need price stability, but we're just going to redefine price stability as inflation that's lower than 2%. So as long as we're under that 2%, we're good. Well, then the 2% ceiling became a target. All of a sudden, we need 2%. If we have 1% inflation, that's not enough, right? Prices can't be stable, they have to go up. And if they're only going up by 1%, that's not enough. Now they have to go up by 2%. Now the target has become a floor. Now, basically, the Fed is saying prices need to go up at least 2%. We need more than 2% to be symmetrical, because now we have to make up for all the years where inflation was below 2%. So now 2% is the floor. So it went from price stability to a ceiling to a target to a floor, right? They're boiling a frog here. But now, and so when inflation goes to 3%, 4%, they're going to claim this is a good thing. Hey, we saved you. Nixon imposed wage and price controls when inflation was 4%. It was considered so bad. And of course, if we still measured inflation today the way we measured it when Richard Nixon was president, we'd probably already be over 4%.
You think there's going to be a big correction in the stock market? Some folks think listen, if the bond market starts cracking, the stock market's going to crack too. Do you think both stocks and bonds will take a big hit because they've been propped up with intervention and modern monetary policy, whatever you want to call it, but money printing?
Well, I definitely think so. It's hard to know the order. Obviously, if the bond market tanked, the stock market would follow. I mean, because higher interest rates are going to basically be kryptonite to the stock market, right? If they were Superman. I mean, but if the stock market tanks first, that could actually cause money to come into the bond market as a so-called safe haven move. So if stocks really collapse first, then bonds will probably catch a bid. But ultimately, I think bonds are going to fall. But one of the things that the stock market is not even factoring in, and they're going to have to start doing this, is the increasing likelihood that Donald Trump is not going to get reelected. And you have to remember that the stock market is priced where it is based on the extra earnings from the tax cuts, right? And based on the idea that we're going to have a business-friendly administration that's going to be cutting regulations and maybe more tax cuts in the future. So this has been a pro-business climate, right, that has been baked in. In fact, had Trump not won, had Hillary Clinton won, this rally never would have happened. The stock market would be a lot lower. We would already be in recession. We would have gone into recession probably in 2017. We were headed there in 2016. And I bet that had Hillary Clinton won, the Fed never would have raised rates a second time. The only rate hike we would have had was one and done. They would have gone right back to zero as soon as Hillary was sworn in, and they would have been doing QE. But because of the enthusiasm that was generated by Trump and a lot of false optimism, the Fed was able to raise interest rates, a couple of percentage points before they had a reverse. But what the market is not factoring in is Trump losing, because if you look at the polls, he's way behind.
Well,
and I know people
we
like
saw
to
that
say,
last time though.
but
the
Greg,
media lied about completely lied about. I mean, you had George Stephanopoulos on. Hillary's up by 12 points, and we know how that worked out.
Well, here's the thing, Greg. You got to remember.
The media is a giant propaganda operation at this point.
Right, but remember, I was one of the guys out there, and I was coming on your show, and I said I think Trump could win. I didn't think it was a guarantee, but I thought he had a good chance of winning, and I thought the media and the polls were underestimating that. So the reason I don't think he has that same chance this time is, first of all, the polls were right in that he lost the popular vote. Hillary got more votes than Trump. They got that right. The reason that Trump won was because 4 or 5 key states, he won by a very narrow margin, and that put him over the edge electorally. If you look at the polls in those states, he is so far behind against any Democratic candidate. The odds of him winning those states again are very slim. But also, the reason that I believed that the polls were underestimating his support was I thought at that time a lot of people were embarrassed to say that they supported Trump because nobody thought he could win. So it's like, hey, why would I come out and acknowledge that I'm voting for Trump? And I think there were a lot of people, Democrats, union workers in the Rust Belt, some of these guys might have voted Reagan at one time. But I think they knew that all the stuff they were getting from Washington was a bunch of BS, right? Obama and Wall Street and the media were saying we have this great recovery, everything is great, look how low the unemployment rate is. And I kept saying this is phony, this isn't a real recovery, this is a bubble. And Donald Trump basically campaigned on the exact same rhetoric that I had. He was out there saying the economy is a disaster, it's the worst ever, the numbers are fake, they're a fraud, don't believe these unemployment numbers, Don't believe GDP. The stock market is a big, fat, ugly bubble. The Fed is artificially intervening. And I'm going to end all that. I'm going to restore American greatness. I'm going to restore manufacturing, all that stuff. And I think that appealed to a lot of people who were disgruntled, right? And they voted Trump. Well, now Donald Trump is not going to get those voters, because now Donald Trump is asking the voters to swallow the same BS that Obama was. Now, all of a sudden, the unemployment numbers aren't fake. They're real. They're genuine. We should believe them. All the government numbers are now sacrosanct. They've come down from heaven and on tablets on Mount Sinai. This is exactly the way it is. The trade deficits are the biggest they've ever been. They're bigger than they were under Obama. Manufacturing is already in recession, and it'll be deeper in recession by the time the election comes. The numbers are the worst they've been since 2009. So most voters who voted for Trump, blue-collar workers who voted for Trump in 2016, will be worse off in 2020. They'll have more debt. They'll have lower real wages if they even have jobs. And so now who are they going to take a chance on? Some socialist Democrat who's promising to punish the rich, right, and take their money and give it to them. So I don't think you're going to have that support that he got last time. And I think it's going to be the Democrats that are going to be able to say, let's drain the swamp, right? Because Trump is now the swamp. He's the leader of the swamp. The swamp is deeper since he was elected. It's unfortunate that he squandered his presidency. I was really hoping that he would take advantage of this opportunity to really go after the swamp, start cutting government spending, deep cuts that politicians are afraid to make. Go after, eliminate agencies and departments. Go after entitlements, right? Really try to set the stage to make America great again. Instead, Trump just acted like a politician, only he put his own brand on it, right? I mean, he's selling himself like he used to sell his steaks, right? You ever see the commercials for Trump steaks? They're the greatest steaks in the world, right? They were the greatest steaks ever, right? So now, he's the greatest president ever, and the U.S. economy is in the greatest shape ever. That's how he's marketing this. But I don't think the voters are going to buy into it.
Okay, that won't be very popular for a lot of people, but I have you come on to give your unvarnished truth. Do you think we get a new currency at some point? I mean, at some point, does it get so bad that, some people say the Federal Reserve goes away, we end up with Treasury dollar, we end up with a gold-backed currency. Do we get that ever in your estimation?
Well, look, gold's going to be money again. There's no question in my mind that that is going to be the case. I mean, what exists today is an aberration in modern history. I mean, we've had fiat currencies before. It's not like we invented them in 1971. They've been around. I mean, the reason the founding fathers, when they wrote the Constitution, they constitutionally put America on a gold standard, and they established gold and silver as the only legal tender in the U.S. And they did that because they were very learned. They had actually firsthand experience with paper currency, the Continental, which collapsed and, gave birth to the expression not worth a Continental. So, our founders had seen paper money collapse, but they had also studied history, and they understood that paper money didn't work and it always failed. The only difference between the fiat money that we have now is that the whole world is on it. In the past, it was only individual countries that tried it, and then they collapsed, and then they would go back to gold. But today, nobody's on a gold standard. The last country that delinked its currency from gold was Switzerland, and I think that was sometime in the 1980s. But we're on a global fiat system, but it's still going to fail. It's just taking longer to do that. And when the dollar collapses, because the dollar is the linchpin of the global monetary system, because it's the main reserve currency, it backs up other currencies. The problem is there's nothing backing up the dollar, but a bunch of political hot air. Now, some people think it's our military that backs it up, but, the Soviet Union had a big military. What did that back up? Eventually, you implode financially. You can't afford to maintain your military. So when the dollar really implodes, which we're coming to, the world is going to have to find a way to bring stability to the monetary system and to instill confidence in their currencies among the people who use it. And the only way to do that is to tie it to gold, back it to gold. There are some people that think, the dollar is never going to lose its status because no currency could replace the dollar. Look, the dollar didn't replace the pound, right? The pound was the major currency before the dollar, but currencies weren't backed by pounds. The pound was backed by gold, and everything was backed by gold. We were on a gold standard. The pound might have been the dominant fiat currency, but the world was still on a gold standard. It wasn't until Bretton Woods that the world left the gold standard, but only in a roundabout way, because we convinced the world to hold dollars instead of gold because we paid them interest on their dollars, but their dollars were backed by gold and they could get their gold whenever they wanted. The dollar was as good as gold. And so once we conned everybody into accepting our dollars, we screwed everybody by defaulting. And we said, hey, we know we promised we were going to pay you gold. We're not going to pay you anything. You're stuck, right? But the dollar was marked down in the 70s as a result of that, but it continued to function as a reserve currency. But what's going to happen when the dollar collapses? They're not going to go to the euro. They're not going to go to the yen. They're not going to go to the renminbi. They're going to go back to gold. I mean, that's the only thing that works. That's the only thing that makes sense. And if you look at what's happening now, look at China, look at Russia, look at other central banks, they are big buyers of gold. Why are they doing that? They are preparing for a return to a gold-based monetary system, and they want to have as much gold reserves as they can. That's why individuals, should be buying too. Try to front run these central banks before they really bid the price higher.
How high? I'm going to put you on the spot. How high do you think the price will go? Jim Rickard says, 10,000. He also mentions 40,000 an ounce, depending on how much you want to back it by. It's not, crazy numbers.
Look,
I mean,
there's no way to know. But we've had major crisis, in the U.S. economy, and in 1932. The Dow was you could buy the Dow for an ounce of gold in 1932. But in 1928, you needed 20 ounces of gold to buy the Dow. 1966, you needed 20 ounces of gold to buy the Dow. 1981, 82, you could buy it for 1 ounce again. So we have a couple of periods of time where things got really bad and you can buy the entire Dow for an ounce of gold. Now, what would happen today to buy the Dow for an ounce of gold? Well, the Dow is 26,000 and gold is 1,500. I mean, where are they going to meet? So, there is precedent to see a significantly higher gold price than the one we have now. You just don't know where it's going to be, how much higher it's going to go. At a minimum, $5,000 to $10,000. But I think it's actually going much higher than that. But there's no way to know for sure because there's no ceiling on the price of gold, because there's no floor on the value of the dollar. Because really, what gold is measuring is the value of the fiat dollar, right? So it's not like what is the gold price in dollars. You should think about what is the dollar price in gold. And it's really the dollar that is losing value. Gold is just maintaining its value. But, I think gold is undervalued relative to where it should be because so many people have too much confidence in central banks and fiat money. They don't realize that they need to own gold. I think they're going to come to that epiphany soon. And when they do, the price of gold is going to explode. And as I said, people should own it. They should buy gold now. That's what I'm telling clients at Schiff Gold. That's why, we manage a gold fund at Euro Pacific Capital. Actually, Adrian Day manages it. And it's, if the real killer, you want to make 10, 20x on your money, the gold stocks are the way to do it, the junior miners, but you have to have a guy that knows what he's doing. Adrian Day's been doing this for 30, 40 years. That's why I let him, I'm not an expert. I'm not a geologist. I know gold prices are going up, but gold mining is a tricky business. So he's picking the stocks. He did a great job. If you look at our fund, for the first 5 years that we were in business, ended December 2018, I had the number one fund, number one gold fund, 5 years for 3 years. Morningstar gave us 5 stars. Lipper sent me a plaque in the mail, which I have. And we've actually recently launching individually managed accounts by Adrian, where we're managing portfolios of gold stocks through Euro Pacific Capital. But I mean, this I think is the subprime trade of the next bubble, because people ask me, hey, what's the big short? Because we had a hedge fund and we were in on that trade in 07 for some of our clients who were smart enough to take me up on my offer to short subprime. But they say, what's the big short this time? It's the dollar, and the best way to short the dollar is by owning gold stocks. If you want to, you want to really, hit the ball out of the park.
Less risky, actually. Just owning something is less risky than trying to navigate a short.
Yeah. So there is an opportunity. It's unfortunate that things are going to go down the way they are, but you might as well make money off it, because a lot of people are going to have to experience a tremendous loss of individual freedom, and watch the country go through a very difficult time, and they're going to lose money. So, you might as well make money, and then at least you could use your wealth productively. That's one of the reasons I'm here in Puerto Rico, because at least I've got no capital gains tax here. So if they raise the capital gains taxes to really confiscatory levels, they can't confiscate my gains. And if we get a crazy wealth tax, they can't tax my wealth because it won't apply to Puerto Rico.
And silver, just while we're just your thoughts on silver, because people say, why don't you ask about silver? What do you think about buying silver?
Look, whenever I say silver, just add the word gold, because it's, if gold's going up, silver's going up too. And if gold goes up enough, silver's going to go up more. I mean, if I'm right about where I think gold is going to go, silver's going to go up percentage-wise even more. I mean, it always works out that way. I mean, is it a guarantee? No. But if you just look back at history and you look at every gold bull market, silver's ultimately beaten it. And so, yeah.
On a percentage basis.
Yeah, it's going to beat it on a percentage. But, of course, if I'm wrong and the price of gold goes down, well, silver has even more vulnerability. So, it depends. So you can have a balance. You can have some. I really wish a lot of the people who are just buying crypto, if they just buy silver instead. I mean, I think you got so much more upside potential in silver than you do in Bitcoin. And you got a lot less downside risk.
Yeah.
Silver's never going to zero. Bitcoin could. And all these pie in the sky, Bitcoin's going to double, triple, go up tenfold. The likelihood of that is very slim, but silver could easily do it. I mean, silver's been to $50 twice. It was at $50 in 2011.
Yeah.
What is it now? It's not even $20.
And mining cost is, actual mining cost is somewhere around 14, 15, according to people like David Morgan. And so where's your bottom? How much can you lose at, I don't know, $17 an ounce plus a commission? So
where people should be worried is how much are they going to lose buying, 30-year bonds with negative yields? I mean, how much inflation is going to rob you of your purchasing power? There are some countries now that have issued 50-year bonds. I mean, this is ridiculous. That's where all the risk is. People think gold and silver are so risky, yet they're willing to buy all these bonds at negative yields. Obligations of bankrupt governments in fiat money that they create out of thin air. And then other people are buying stocks at huge multiples of their earnings, or in many cases, they have no earnings at all. And they're buying stocks that have never made a dime of profit and probably never will make a dime of profit. But they think nothing about buying those stocks, but they think gold is too risky. It's incredible. What so many people think is prudent and safe is actually extremely risky. And what people regard as being very risky is actually very prudent.
Peter Schiff, Euro Pacific Capital, Schiff Gold. I'll put the links up. Thanks for throwing a hard, brass knuckle punches here and throwing a cold bucket of water on some people. I know some of your comments about Trump aren't going to be. In this case, I hope you're wrong. But listen, you're a smart guy. You manage millions, billions. I don't know, a lot of money, and you're a smart guy. And you've been right in the past. They had the video, Schiff's right. And
Greg, I really appreciate you letting me step in the ring and throw some punches. But look, I know that there are people out there that like Trump. I mean, as a person, I like him. I voted for him. I wish he would have been more successful in doing the things that I had hoped he would do. I mean, I wasn't a Pollyanna about it. I mean, there's no way I could vote for Hillary Clinton. So I took a shot and voted for Trump anyway, hoping that as president, he would be like he was as a candidate and maybe really try to shrink government and shake things up in Washington. It's unfortunate that he didn't do that. Now, I think, a lot of stuff that he's being attacked for from the left is all misplaced. I mean, most of the criticism against Trump is wrong. I mean, nobody's really criticizing him for the reasons I am, for the growth of government, for the growth of debt. I mean, I'm all for tax cuts, but I understand that tax cuts are a lie if you don't also cut government spending, because taxes are how we pay for government. And so you have to make government cheaper to let the taxpayer off the hook. But not only did Trump not cut government spending, he actually raised government spending, and not just on the military, but on welfare. So welfare and warfare spending went up, and then he claimed credit for cutting our taxes. That's a lie. He made government more expensive, and the taxpayer is on the hook for the cost. So, I wish this wasn't the situation. And do I think that a Democrat is going to be better than Trump? No. I mean, in fact, I think that Hillary Clinton would have done even more damage. But the damage that Trump is doing is one of, I think, the reputation of the free market. Because since he is pretending everything is so great and that it's all because of him, if it crashes down, then he gets all the blame. And by association, so does capitalism. So do tax cuts and deregulation. So I think he's going to do even more damage to the reputation of capitalism, which was already damaged unfairly by the financial crisis. And remember, I was a big critic of George Bush. And that's when they used to let me on television. I used to go on Kudlow's show all the time. And Kudlow loved Bush. And the economy was great. It was the greatest economy ever, right? It was the greatest story ever told. It was Goldilocks. And I would come on and I would tell Kudlow and all his buddies, Art Laffer and all those guys, that this is a bubble. You guys are making a big mistake cheerleading this bubble. It's going to crash. we're going to get blamed for it. The Republicans, capitalism, and then we ended up with Obama. I was right to criticize Bush and to criticize the economy. Look, I met Bush. He's a nice guy. He's a personable guy, and he was, I think he was better than the Democratic alternatives. But again, he grew the deficits. He grew government. He didn't tackle entitlements. He just let the problems get bigger, and we pretended that a bubble was a real economy. We're making the same mistake again under Trump. We didn't learn our lesson at all under Bush, and now we're going for another defeat. And unfortunately, whoever succeeds Trump is likely to be much worse than Obama. So, I wish it was different, but that's the reality. And it's because we denied reality under Trump that we got Obama. And the problem is, Obama did a lot more damage to the economy than we know because the Fed was able to postpone the day of reckoning, right? At least Trump hasn't added a lot of really bad regulations to what Obama did, but the Fed has still been able to delay the reckoning. What Trump did, though, is just make the deficits bigger, which is a problem. We need to make the deficit smaller. So, people have to understand. And, I even saw at Schiff Gold sales plunged ever since Trump was elected, right? We were selling a lot of gold when Obama was president because people were worried. But, of course, in hindsight, people should have bought stocks. They should have sold their gold and bought stocks because stocks did a lot better than gold with the benefit of hindsight. But, gold is doing great since Trump's been president, and no one's buying it. In fact, there's a very good chance that by the time Trump leaves office, the U.S. stock market will actually be lower than when he was sworn in, and gold will be much higher. So, people should have done the opposite. They should have been buying gold on the election of Trump, but because they got so optimistic, they sold gold. And, of course, when Trump loses and now there's a Democrat, gold will probably be over $2,000 an ounce by then. And now people that sold it at 11 or 1,200, buy it back maybe twice as high. People should buy it back now instead of waiting.
Peter Schiff, Schiff Gold, and also Euro Pacific Capital. Peter Schiff, thank you for joining us today on USAWatchdog.com.